Mr. Jimenez, you have presented your results for the first 3 quarters of 2017 today. How happy are you with the financial developments of Novartis?
I'm very pleased with our performance in the third quarter because we were able to grow the total group sales about 2%, despite the fact that we lost patent protection on our biggest drug. And that was because all divisions grew: innovative medicines, our generics business, and the Alcon eye care business.
Let's speak about Alcon. You've postponed your final decision. What are the exact reasons for that?
Well, if you look at the strategic review that we've done in the last year, we've confirmed that this is a good business, and if you look at a strategic plan, we should be able to grow at or ahead of market. And you're starting to see that. The last 2 quarters, we've been able to grow sales, and in fact, in this quarter, we grew profit over 20%. So in the near term, that business will benefit from continuing to focus on their turnaround. And what I want to see is multiple quarters of growth, sales and bottom line, before we make a final decision as to a capital markets exit.
But still, doesn't this decision kind of leave the investors in a state of limbo?
I don't think so. I think we've been very clear that we looked at the strategic review across all options from retaining to selling to a capital markets exit. And we said this morning that while we haven't made a decision, a capital markets exit such as a spinoff where we create a separate company could add significant shareholder value. But we really need to see multiple quarters of growth, and that's why we're focusing on the turnaround today.
You have had recently some success with your research pipeline. How is the market looking for CTL-019?
The market's looking very well. We got approval, and we're actually qualifying centers around the U.S. right now as we speak. We have a number of centers that are right now able to process cells, and we're in the process of performing the therapy for our very first patient. So overall, it's going very well.
And let's speak about Sandoz. You are faced for some time now with high pricing pressure in the U.S. market. How long do you expect this to continue?
We expect the pricing pressure on the generics business to continue in the U.S. because if you look at the fundamental reasons, it's because of consolidation in the supply chain. So we don't think that's going to change anytime soon. But the good news is that Sandoz in the third quarter was able to grow 1% despite that, and that's because only about 30% of our business is in the U.S. 70% is here in Europe, and in Eastern Europe and in Asia, and we're doing quite well. So, for example, we just launched a biosimilar of rituximab in Europe that is off to a good start, and that was able to offset the pricing pressure in the U.S.